Hello and welcome to our video on retiring on MULN stock by 2040. In this video, we'll talk about how many shares of MULN stock you would need to retire by 2040 and the pros and cons of investing in this stock. Before making any investment decisions, it is important to thoroughly research and consult with a financial advisor to understand the risks and potential rewards of any investment. It's also worth noting that before investing in any stocks, we need to understand the background of the company or the stock. Let's quickly learn about the humble beginnings of Mullen Automotive. Mullen Automotive was founded by David Michery and William Mullen, headquartered in Brea, California. David Michery, the CEO, has been in the automobile industry for over 2 decades. Starting his career as a car dealer, he saw a growing demand for electric vehicles and wanted to make them more affordable and high quality. That's why he established Mullen Automotive in 2014. Michery's vision for Mullen Automotive is to provide an affordable electric vehicle option to the masses, and he plans to achieve this through strategic partnerships and collaborations. For example, Mullen's partnership with Chinese automaker Jiangsu Motors has helped the company expand its global reach. In 2018, Mullen Automotive acquired the rights to the design of the Jiangsu K50 electric sports car and announced plans to build it in the United States under the name Dragonfly. The company started taking pre-orders for the vehicle, which has been highly anticipated. In 2020, Mullen Automotive merged with NetElement, a financial technology company, to become a publicly traded company on the Nasdaq Stock Exchange. The newly formed company, Mullen Technologies Incorporated, Mullen Automotive, focuses on producing high-performance electric sports cars. In 2021, the company announced plans to build a manufacturing facility in Arizona to produce the Dragonfly. The company also plans to introduce new electric vehicle models, including a compact SUV and a high-performance sedan. So, that's a little bit about Mullen Automotive and its journey so far. First, let's take a look at the current stock price of Mullen, which is 10 cents. To retire by 2040, you must have a retirement nest egg target of $1 million. Let's assume that from 2023 to 2030, you invest 30,000 shares at 10 cents each year, totaling to $3,000 worth of shares per year. By 2030, you will have accumulated 210,000 shares in Mullen. However, if the stock price remains at 10 cents, we need to calculate how much we need to save or invest each year until 2040 to reach our goal. Assuming a 5% compounded growth rate and considering your current salary of $65,000 per year, which will increase to $70,000 per year from 2030, you would need to invest $5,850 per year from 2023 to 2040 to reach your retirement nest egg goal. From 2023 to 2030, you're investing 30,000 shares of Mullen stock each year at 10 cents per share. This means you're investing a total of $3,000 each year in Mullen stock. Assuming a salary of $65,000 per year and a 25% tax rate, the amount of taxes you would need to pay would be $65,000 times 0.25 equals $16,250. So if you invest $3,000 in Mullen stock, you would have $65,000 minus $16,250 minus $3,000 equals $45,750 left over. Out of that $45,750, you would need to allocate $2,850 to other retirement accounts, such as a 401k. From 2030 to 2040, you have 10 years to continue investing in Mullen stock to reach your retirement nest egg goal of $1 million. The annual amount you need to invest during this period is $5,850. This amount was calculated earlier by subtracting your estimated Social Security, and pension income in your estimated expenses from your retirement income goal of $65,000 per year. Assuming that the stock price remains at 10 cents per share, you would need to purchase 58,500 shares each year for 10 years to reach your retirement nest egg goal. To calculate the number of shares you need to purchase, you can divide the annual investment amount of $5,850 by the current stock price of 10 cents per share, which gives you 58,500 shares. So, in summary, from 2030 to 2040, you need to invest $5,850 per year and purchase 58,500 shares of Mullen stock each year to reach your retirement nest egg goal. However, it's important to remember that these calculations are based on certain assumptions and estimates, and investing always comes with a level of risk. Researching and consulting with a financial advisor before making investment decisions is important. What about if the stock price reaches $1 by 2030? Before that, let us consider other important items when it comes to investing in any stock. Let's identify the pros and cons and take a closer look at Mullen's financial statements. They are important indicators in keeping track of your investments. Pros: Mullen Automotive's unique business model focuses on direct sales, potentially leading to cost savings for customers. The electric vehicle industry is growing rapidly, and Mullen Automotive is well positioned to capitalize on this trend. Mullen stock has the potential for high returns due to its relatively low stock price. Cons: Mullen Automotive is a relatively new company, and there's always a risk involved with investing in new companies. The electric vehicle industry is becoming increasingly competitive, and there's no guarantee that Mullen Automotive will be able to compete with established players. Another key factor in investing in any company is the company's financials. Let's start with the PE ratio. The PE ratio is a commonly used tool for valuing a company, and it's calculated by dividing the current share price by the earnings per share or EPS. Alternatively, it can also be calculated by dividing the company's market cap by the net profit. For Mullen Automotive, the PE ratio is negative 0.05. This means that the company's earnings per share are negative, which is not uncommon for early-stage companies that are investing heavily in growth. Moving on to the 52-week high and low. The 52-week high is the stock's highest price in the past 52 weeks or 1 year. Mullen Automotive's 52-week high is $1.71 as of April 21, 2023. On the other hand, the 52-week low is the lowest price of a stock in the past 52 weeks or 1 year. Mullen Automotive's 52-week low is 8 cents as of April 21, 2023. Moving on to the market cap, also known as market capitalization, it's the total market value of a company. It's calculated by multiplying the current market price by the total number of shares outstanding. For Mullen Automotive, the market cap is $321.2 million. Next up is EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. It attempts to reflect the cash profit generated by a company's operations. For Mullen Automotive, the EBITDA is negative 3.24. This means that the company is not generating positive cash profits at this time. Let's return to the hanging question. What about if the stock price reaches $1 by 2030? The total value of your investment in Mullen stock would increase significantly. By 2030, you would have accumulated 210,000 shares of Mullen stock by investing 30,000 shares each year for 7 years. At a stock price of $1, the value of your investment in Mullen stock would be $210,000. Now, let's assume that you still want to achieve your retirement nest egg goal of $1 million by 2040. With a value of your investment in Mullen stock at $210,000, you would need to invest an additional $790,000 to reach your goal. This means you would need to invest $79,000 per year for 10 years from 2030 to 2040. However, if the stock price of Mullen reaches $1 by 2030, the value of your investment in Mullen stock will increase to $210,000. This would reduce the amount of additional investment you need to make to reach your retirement goal. So, if the stock price of Mullen reaches $1 by 2030, you would only need to invest $7,900 per year from 2031 to 2040 to reach your retirement goal. This amount is calculated by subtracting the value of your investment in Mullen stock, $210,000, from your retirement goal of $1 million and then dividing the remaining amount by 10 years. This would require you to purchase 7,900 shares of Mullen stock each year for 10 years, which is significantly less than the 58,500 shares you would need to purchase if the stock price remains at 10 cents per share. In conclusion, retiring on Mullen stock by 2040 is achievable if you invest correctly. By investing in Mullen stock starting today, you can build a solid retirement fund and achieve your financial goals. Just remember to consider the risks involved and make informed investment decisions. Good luck! Thank you for watching, and we hope you enjoyed the video. If you found this video informative, please give it a like and share it with your friends. We'll keep you updated on Mullen Automotive's future, so make sure to subscribe to our channel and hit the notification bell. Also, leave a comment down below to let us know your thoughts on this topic. Watch this video here if you want to dive deep into the latest Mullen controversies. See you there!